Hi guys, welcome back to the channel. Welcome back to another technical analysis video. Today we're going to be jumping into the world of Solana. We'll be reviewing the most recent price action and where I think the price is heading next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, go ahead and subscribe and tap the bell to stay up to date with all the content that we do here at 𝗕𝗘𝗪𝗧 Crypto. Let's jump right down into the charts. So here we have Solana paired up with USDT. We're on the 1-day Binance chart. Following on from the previous video that we put out, I think about 3 or 4 days ago, we were talking about the idea of moving out towards $190 to $198. Yesterday, we did see the wick go up to a high of $193.98 and then get rejected. This is in line with Bitcoin just trying to tap on that $70,000 level before crashing down to the 65K range. Okay, so Solana's actually held up quite well. It has reached our expectations. It is a 5-wave structural point, and it does look like this is where we are likely to find the reversal in the market, at least for the wave 3. I'm going to show you what I mean. Okay, so as we were kind of previously talking about when it came to everything that was going on with Solana here, we do see some interesting structures, right? So here we have the wave 1. We can see that we come up higher than 1.618, and we obviously finished this structure off here. And I was going to say it looked like a wave 3 completing, but actually it looks like the whole entire structure has completed. So we have wave 1, wave 2, wave 3, 4, and 5. This means that we are likely to see a retracement back down. It could be reasonably aggressive, but it's a little bit too soon to know exactly where that's going. But I would give you an idea as to kind of where typically the price action would retrace to. It would be between the kind of 50 and 88.2%. Okay, so it can be quite deep, but I don't think it's going to be, but I'll give you an idea anyway. So here we can see this little yellow box area I'm just drawing in. Comes in $127 to $153. Now that's a kind of medium time frame. That's not something that's going to happen right away. I imagine that we're going to see reasonable amounts of volatility. We may even see another run and then another collapse down. We'll kind of tap into this range at some point in the future. Okay, that's not because I can't, it's not because I'm just saying these things and give you like the idea that, we're going to go down and we'll eventually get there. But because the structures here tell us that we should be expecting this move. It doesn't tell us, the structure here doesn't tell us how long it's going to take to get there. And that's a key important thing. There's going to be lots of volatility on that road down into this range. But this range is a range that is highly probable. It's not a guarantee, but it's highly probable. Okay. Very important that we kind of get those, I guess, distinctions out of the way. Now, a 5-wave move is incredibly bullish, and this is a good indication of things to come. A retracement is not a bad thing. Okay, the retracement is simply just a part and part of the entire crypto space with the volatility that you expect. Completing 5 waves like this gives us great ground to think about what happens afterwards. After a 3-wave correction, we should be looking for another 5-wave move. So let's take this down into a 4-hour time frame. Let's take a look at what's going on the 4-hour. So on the 4-hour time frame here, we can see good run to the upside, good retracement. We have got higher highs on the daily time frame, and we have got higher lows on the 4-hourly time frame. And we obviously can see the 50 SMA, the yellow line, and the 50 EMA, the blue line with the white 200 EMA are all stacked in the right positions as well. Good support to be found. So just because I'm saying there's going to be a retracement on the daily time frame, that is not an indication to say that it's going to happen immediately and we're going to only go down from here. There's actually a lot of positivity to be seen on the smaller time frames, which means we might see a few surges to the upside, some decent percentage gains on the smaller time frame. We might see 5, 6, 10% runs on the daily time frame before we actually kind of see those larger pulls to the downside. Inevitably, though, what I do see here is a continuation of a downward move. That's more than likely going to be in a 5-wave fashion. But let's go ahead and come back to our daily time frame and review some of the other things that are going on here. If we go ahead and bring on our smart money concepts, we can see that we have broken up into new daily highs most recently, but not ahead of that $210 range. Okay, that one's holding up quite well, at least at the moment. We are in a bullish structure. Yeah, we are still in a bullish structure. I can't notice anything concerning there at the moment. So we still remain in bullish structures, indicating that we have weak highs and strong lows. weak highs and strong lows are correct, indicating that we're not likely to come down deeper than this $116 level under the current structures anyway. Equilibrium is also lower than the price action. 50 EMA, 50 SMA, and 200 EMA all stacked correctly as well. So you have this kind of bullish outlook. But just because you have a bullish outlook with a break of structures that are all kind of bullish and all telling us that we're going up higher, we have weak highs and strong lows, equilibriums in the right places, all these things are great, but the 5-wave pattern in itself completing tells us that we should be expecting a correction. There's no guarantees that we come all the way down into that range that I was talking about. That's just the most probable area for retracement. And then once we kind of complete the retracement, we will be looking for an additional 5-wave move, which will break us out into a new daily high. That could be something that happens, a couple of months down the line. Doesn't have to happen right now, but it's something that we should be looking forward to. There's only really one other option here that this 5-wave pattern can explain, and that is a 335 correction, which would be this one here. Okay, it's a possible scenario which would actually put us into a bearish pattern overall, like so. This would get confirmed if we actually do see a significant slippage to the downside, breaking down lower than the previous lows. Okay, it's actually quite a difficult one to tell because irregular flats and regular flats and these kind of 335 corrections, they're not that common, but they do happen. So just bear in mind it's a possible scenario here where we actually will see further slippage to the downside under a kind of corrective pattern like that. Okay, now if we kind of see major slippage and it's impulsive in its nature, then that's going to be probably where our mind's going to be at, where we are looking for much deeper corrections. I think that's something that is possible if we do not break $210 during a Federal Reserve pivot, which will be when the Fed lower their interest rates, which is incredibly bullish, but happens at the worst possible time, and we see liquidity being extracted from the market. As such, we could see those prices coming back in where we will be testing and potentially dropping down lower than $116. But we don't have to worry about that right now because that would be way off in the future, several months from now, as a pivot would happen in September, in my opinion, a couple months down the line. So looking at the structures, it's not all that bad. Let's turn smart money concepts off, come into our stochastics. Here you can see the daily stochastic RSI is still looking for downward momentum. This is an indication that things are potentially reaching their upper limits and we're likely to see that correction to the downside. Okay, that talking about this range between 127 and 153, not necessarily going down deeper than 116. The indication on the stochastic RSI on the 1 hour and 4 hour timeframes show us that we might see a little bit of a bounce here back up into this range, possibly. Of course, the stochastic RSI is not an indication of price movement, but is just an indication of the strength in the moves. And this basically shows us that on the smaller timeframes, there's potentially the momentum available to push Solana a little bit higher. If we turn off the stochastics and bring on the relative strength index, you can see that there's still some potential here to lift up the RSI a little bit more. At the same time, though, we can, of course, come back down towards that 50 level and test out that support range on the relative strength index. And that would be more in line with where I think the stochastic RSI is currently heading. So to me, this doesn't look like we have to move up. We can, but the stochastic RSIs, which are more sensitive to price movement, tell us that we are more than likely actually going to be correcting down, not up. So it'll be interesting to see how this plays out on the daily time frame. Now, Bitcoin's obviously pulled back quite aggressively. Solana's held up quite well, which is quite interesting. If we take a look at the volume profiles here, one of the things that's worth noting is volume is decreasing as we've pushed up into that 5-wave pattern. Again, that shows that there's weakness in this move to the upside. Not a lot of buying pressure here. So we're looking for a correction. I think that is the most probable medium-term scenario here for Solana, but I don't think it's going to happen overnight. It's going to take several weeks, maybe even a couple of months before we start to see these numbers. And that irregular flat is a concern, or that 335 correction, sorry, is a concern, where if we do see a Federal Reserve pivot that the market reacts negatively to, we could be looking at basically $100 Solana. Now, if we come up into a weekly time frame, that kind of then falls in line with the expectations here, as you can kind of to see the three-wave pattern that I put on here during that Federal Reserve pivot, where we just dropped down lower than $100, more towards that kind of $91 range. And that there could be the end of this correction before we get into that next big bullish run to the upside for Solana, where of course we are going to be talking about $688 to a $1,200 range. That is where I think the most probable scenario is going to be. But there's obviously that possibility where it rallies up higher towards $2,400 to $5,000. I don't think that's likely to happen. There's many reasons why, but I think the most probable is going to be, $688 to $1,200, which would be pretty phenomenal for anyone who was buying back in December of 2022 at $7 or $8 or whatever it was. So looking very, very good. Good five-wave structure. This potentially is the reversal, but I don't think it is. I think we still have another correction here during the Federal Reserve pivot. And from there, I think we're going to have some fantastic opportunities to build out those positions in Solana. Now, guys, you can let me know what your thoughts are on all of this in the comments down below. Do you agree? Do you disagree? What is your kind of long-term price prediction for Solana? Let me know. If you found today's video useful, smash the like button. If you are new, subscribe. And if you haven't done so yet, go ahead and check out my other channel where I go through a lot more technical analysis on things like Bitcoin, Cardano, XRP. It's not one to be sleeping on. Go ahead, give it a click.